The major average is turning positive across the board, but our next guest sees a lot of continued risks out there, predicting a 10% market correction from the recent highs. Here for a Power Lunch exclusive is Ron Kruszewski, Chairman and CEO. Got you mixed up with the coach there. Chairman and CEO of Stifel Financial. He joins us from the Stifel Cross Sector Insight Conference in Boston. I'm going to call you Ron from here on out just to be safe. Ron, welcome. Good to have you with us. Why do you think the market is a little bit vulnerable to a 10% pullback? What are the factors that could cause that to happen?
Well, first of all, we and I have been saying all year that we didn't believe that the Fed would be decreasing rates significantly. And as the market comes to grips with that, coupled with the rally we've had, we believe that there's more short-term downside risk to the market. We think a 10% correction investors should be prepared for. And frankly, Tyler, to be a bear from May to October isn't necessarily always hard. It's harder to be a bull during this time. So, but that's our belief. I believe really that the Fed's not going to decrease rates this year for a multitude of reasons.
We just had a rather interesting conversation. I don't know whether you heard any of it with Eamon Javers and the House Speaker, Mike Johnson. And it ranged over everything from the level of debt and deficit and tax policy to the recent trial in New York of former President Trump. Do you think the market has discounted the election result in any meaningful way, whatever that means? And I ask it in part because remember that the stock market set records under President Trump, and it has set records under President Biden. So I guess I'm kind of asking, does the market care?
That's a great question, Tyler. Look, the market's done well under all forms of administrations, and I don't really think that the market cares. I think what the market would care is if they thought there'd be unified government. Then that might, one party controlling, whether it's the Republicans or the Democrats. I think the market generally would not like the pendulum effects of policy that could come from unified government. So maybe that's an indictment against government as a whole.
Mm-hmm.
Ron, I want to sort of ask you a question about the banks, which maybe you have a strong opinion about and maybe not. But it's been conventional wisdom for the past year that the big banks will benefit post-Silicon Valley and the small banks will really struggle. Do you think, why is Jamie Dimon selling stock and then talking down, his own company's prospects at the investor day? Do you think that we have taken these conclusions for granted and perhaps the opposite kind of trade should be warranted? What, the small banks, are they actually doing better than we anticipated?
Look, I think the new deposit regime where deposits are more dear, rates are higher, is a tougher environment for banks without scale. And so, I do think it's been a tougher environment. But look, I think, Kelly, and I've talked about this, and I'm going to go on a tangent for a second. I think the real issue in the next crisis in the banking industry will be a run on small banks when investors are not confident that deposits are insured. And I think the two-tier system where the big SIFIs have implicit government guarantees and small banks do not, is a problem that Congress needs to take up and regulators need to take up now before the next crisis comes and everyone just wants to pull their money out of all the mid-sized and regional banks. But I'm concerned about that.
I think you're exactly right. And we hope that they will do something, or a lot of people think there's just an implicit guarantee of everybody's money. But in the meantime, speaking of a friend who might have moved money out of Chase recently because it doesn't pay anything, is that actually that large trend going on where people have realized, no, the smaller banks are often, places where you can get better yield right now versus the big money center ones?
Well, I think that's the basis of our phenomenal financial system is that we have more than 4,000 banks. We don't need 4,000, but we don't need 5. And the best banking is done by local bankers who know the local communities and the local businesses. I don't think Jamie would disagree with that. I think he sees the strength of the community banking system. I just want to see that the community banks have the same level playing field that the big banks have. And again, I think my big bank brethren would agree with that.